There we go. All right. We are back. Another episode of the Financial Life Podcast. This is the Military Monday segment. And today I have a special guest on. We're talking more about, actually, no, we're going to talk about how to have a tax-free retirement, which a lot of people like to know more about. They're just not sure. But this is specifically for us as veterans and all that. And before I get into that, some of you may know, some of you may not know, I help people out with some financial literacy, some credit, some life coaching. If you'd like help with any of those areas, you can book a call with me on my calendar. Simply go to speakwithmatt.info. Again, speakwithmatt.info. No need to put any www. Take right to my calendar, book a 30-minute call. And I'm also, some of you may know, some of you not know, forward a book. Can't see it in here. Born to Risk. This episode is sponsored by Born to Risk. It's also led by another veteran. So if you'd like a copy of the book, let me know. And each purchase does go to veteran organizations. So you also, when you get a copy, you're also contributing to the betterment of veterans in general. With that being said, I'd like to introduce my guest, Dan Farnsworth, all right, Victor X. And I liked how Dan, you are someone who's specifically wanting to help out veterans and what they do in their financial life, and also I'm going to talk about that. And again, financial literacy, you and I are clearly both big on, right? Me and the credit side of things, but it all ties together hand in hand. So, hey, Matt, thanks for being on. Appreciate it.
Definitely appreciate it, Matt. Thanks for having me on.
You're welcome. So, the question I got to ask you is this very important question: which branch do you serve in?
Well, I know I kind of wear it on my sleeve here.
Oh, well, I can't really make fun of you too much because I was in the Marine Corps, we're part of the Navy, so I'm like, yeah, fine.
There's common ground there. Yeah.
Exactly.
Yeah, no, I appreciate it. No, I was a Navy guy career-wise, did 23 years.
Oh, wow.
I was actually in signals intelligence pretty much my whole career. I started out enlisted, made chief in 2009, and then ultimately commissioned in 2014, and just retired this past year, in fact. So
oh, wow,
now I
congratulations.
am. Thank you. Yeah, now I'm a full-time veteran, and I am committed 100% to improving the quality of life, and particularly the financial status of every veteran out there. I think that, whether you did 2 years, 4 years, or 30 years, we're all in the same family together, and we all earned it the same way. So yeah, absolutely. This has kind of been a life a life commitment for me, and I'm happy to do it and happy to help out. So
Yeah, we need more life insurance agents, actually. I think the stat is there's not enough agents still for the most part, and the need is like higher, and so you need to be in this. I have my life insurance license a while ago, had it twice, and I got pulled in a credit repair. Don't ask me how that works. It just is. It's life.
Hey,
It's
there's
like, all right, you're gonna do
definitely
this.
a
I'm
need
like,
for that.
yeah,
Yeah.
it's like you're doing this. So, okay, it's my path. I'm just gonna take it. So whatever. So,
Sure.
so you're in the Navy for 23 years. So what was how did you go from being in the Navy to I want to do life insurance and do tax year time? Like what was that transition?
Absolutely. No, so I actually about 15 years ago, I started doing the infinite banking strategy that was made popular by an insurance broker named Nelson Nash back in the 1990s. Unfortunately, we just lost Nelson a couple of years
Oh,
ago, but he had pioneered an effort that had really been, almost exclusive to the ultra wealthy community for a number of years. I mean, when you look at, the history of, the Rockefellers, the Disneys, some of these other just, major, financial movers throughout the nation's history, especially in the 20th century. They had all used, the power of whole life insurance policies to be able to fund a number of their projects and to keep money in their families, and especially to keep it tax free. Because under the IRS codes, 7702, 101A, 72E, we can grow cash values in life insurance 100% tax free. And the way that we access those cash values is in the form of tax-free loans against our death benefit. So the death benefit is going to be guaranteed. It's going to be guaranteed to cover the balance on those loans when we pass away. So in reality, even though we teach our clients how to use the loans early on to build the cash values and to ultimately create repayment strategies for those loans early on, once they start drawing those loans in retirement, those loans never have to be repaid. It's basically income at that point. So I started doing that about 15 years ago. Just kind of happened on it. I was kind of poking around on the early beginnings of what is now YouTube and some of the other internet channels at the time.
The
And
interwebs.
the interwebs, right?
Interwebs. Oh, what is this?
It might have still been the DARPA net back then. I don't know.
Oh God, let's not talk about DARPA. That's a whole different podcast.
Yeah. So anyway, so found that, and I got some really good mentorship early on. There was an agency based out of Salt Lake City that helped me to get my first whole life policy set up,
Nice.
and to really teach me how to fund that. I read Nelson Nash's book called The Infinite Banking Concept, Becoming Your Own Banker. And then as I kind of got closer to retirement, I was actually approached by some individuals that were in the industry at the time. And it just kind of, gave me the idea like, well, you know what, I've been doing this for a while, and, I don't really have any other major plans, for the rest of my life, so, hey, why not? Let's check it out and just kind of go down the rabbit hole. And sure enough, here we are, a couple of years into it. And I was able to start my own agency now with Victory X Financial. We market almost exclusively to, veterans, first responders, patriot business owners, and so far it's been very well received. We've had some extremely high success, rates, and, we work with some really great clients, and we've really helped out a lot of people so far. So we plan to continue that and continue to, build it up and make it even bigger in the future. So
There we go. What are your thoughts on, because people don't understand this in the life insurance industry, there's this ongoing argument, which I'm sure still is to this day, where people are like, don't get whole life, it's too expensive, and it's like you need term, but like it's limited, and the people argue for term are like, buy term and that's the difference, and I'm like, that's not, it's never. So what are your thoughts on that? Because that argument has never made sense to me. Because once I've found out about whole life, I'm like, well, doesn't end and you build cash value. I'm like, this makes more sense. Yeah, it's more because you get more out of it. Why are we preaching to be cheap and then try to be financially savvy? That's my opinion. I don't. But what are your thoughts on that? It's just like,
oh man. Yeah. So the buy term, the term versus permanent life insurance, I think that's about as old as the 9mm versus 45 debate, right? So
there we go. Oh no.
You're like, did he actually go there? Yeah, he did.
He went there. I like it. I like it already. I take back. We're gonna let's go. We'll have to go to the range one day at some point. I'll come.
Right.
So that argument right
No,
there, right then and there, like you now out shooting me. I don't care what branch you're in. Okay.
Yeah. No, so it's that debate's been going on for a long time, and I will say this, there are qualified opinions on both sides. I don't
Okay.
want to take anything away from somebody who favors, traditional investing accounts. However, I will say this, right? The biggest advantage that we have in the life insurance industry, which is all encompassing, it encompasses, whole life, index universal life, and all of the annuity products, because those are also, part of life insurance. They're hosted by life insurance companies.
Yeah.
We kind of operate what I would consider to be in the safe money space, right? Are you ever going to get a 30 or a 40% gain even in an index universal life insurance policy? It happens once in a blue moon, right? There are indexes that we're using now that are yielding on average, over the course of the last 20 years have averaged about 10 to 14%. So the gains are actually a lot more significant than, some folks would even attest to, right? Depending on what the carrier is and what the actual index that you're attaching the account to. But the bottom line being, are you ever going to get astronomical gains in life insurance? No, probably not. I mean, you can, I'm not gonna expect that, the people that bought shares in Apple back in the 1980s, that we're going to compare our gains to theirs, right?
Right, right.
However, what we've seen over the course of the last 20 years has been some pretty significant market volatility. Okay, and that includes, people that have money in 401ks, right? Which is a very common vehicle, especially with employer matches. We've all been kind of told when we start working that, hey, you should put money in a 401k or you should put money in the TSP, right? Well, we've seen, like in 2021, for instance, right, when the market dropped 40 points, there were people that lost almost half of their life savings as a result of that. And in some cases, those people are still working as a result of it, because it took them, it's taken them now, over 3 years just to recuperate, even some of the loss, right? Because the market doesn't exactly just rebound,
Yeah,
to the tune of, okay, it was down 40 and now next year it's going to be up 40, right? A lot of times
right.
it was down 40 and now maybe it's up, 5 or 10. So what we have with index strategies in life insurance, and even in whole life strategies with mutually owned companies, is that we know that we will never lose money, right? And the people that had money in IULs and whole life insurance in 2021 lost zero, right? Now they didn't necessarily gain much, but they
Right.
didn't lose any. And
Yeah,
I will take a 0% gain over a 40% loss any day of the week.
I agree with you on that. And that's what it's like. You have that floor where you're like you're good. That okay, cool. Hey, you didn't lose anything because then you're not having to work harder to get back to where you were. I
Absolutely.
don't think people understand. It's like, yeah, you have to then put more money in just to get back to where you were, and then go up from there. Then when none of else happens, it's just it's not a very fun game to play. You're having to work harder versus just you won't take some of that, put in here, let it go, and you're fine. Get your statements and review it.
Sure. Yeah, and again, there's nothing against, term insurance. I mean,
Right.
term insurance is a great, it's a very affordable way for people to insure, to protect themselves against, to protect their beneficiaries, against any, major financial hardships that would result from their death. And we use it a lot in cases like mortgage protection insurance, right? So when
Yeah.
you buy a home, and let's say you're the primary breadwinner and you pay the mortgage for a $500,000 home. Well, if something were to happen to you, how would your family continue to pay that mortgage? I don't think that a lot of people think about that, right? They just kind of think, oh, well, if something were to happen, if they think about that at all, then things will just kind of work out, and the banks will give us a break or something. No, they're not
No,
going to give you a break.
they
Yeah,
don't.
no,
No,
they're not.
they're
No,
not. They're
those
gonna
those
work.
payments are still going to come due. And so we use, things like term insurance because it's very affordable, it's very cheap, and in many cases it's simplified issue. There's no medical underwriting whatsoever. We can get a lot of term policies, approved in 15 minutes or less over the phone.
Right.
And maybe for the cost of $30 or $40 a month, you're now going to have, $500,000 of coverage that's going to last you for 20 to 30 years, that will guarantee if something happens, that mortgage will be paid for. Your family won't be forced out of their home on the saddest day of their life, so.
You don't want that happening. No. Real quick, what can you explain to people what is infinite banking? So for a lot of people, that's a new thing. I've heard of it. I'm familiar with it, but what is infinite banking?
Sure. Yeah. So infinite banking, basically what we're doing with infinite banking is we are taking a permanent life insurance policy, whether it's whole life or index universal life. So this is a permanent policy. It's a policy that's going to be with you for the rest of your life. It's guaranteed to pay out a death benefit when you die, no matter if you live to age 120, right? It's
Right.
going to pay out a death benefit. And what we're essentially doing is we're structuring it, we're engineering it and structuring it in a special way. Now, I will foot stomp that we have to structure this properly, right? Because if we don't, if you just go to any we call it your broke ass brother-in-law and say, you want an infinite banking, life insurance policy. Yeah, you might get a life insurance policy, but it ain't going to be good for infinite banking. So I can tell you that. But we structure these in a way that actually minimizes the death benefit down to basically what the IRS will allow us to get away with. The IRS says we have to have a death benefit attached to a life insurance policy in order for the cash values to be tax-free, right?
Mhm.
There are ways we can set it up that it becomes taxable, and we can, there are strategies for doing that too. But if we're doing infinite banking, we want to keep it tax-free. And what we're doing is we're basically overfunding that policy. Now you might say, well, why would I overfund an insurance policy? What benefit is that? If the insurance only costs me, $100 a month, why would I put in $500 a month? Well, the reason being is because the money that we put in the excess of the actual insurance itself goes into a separate cash value fund that then grows tax-free. And we have total liquidity and total liquid access of that money while it's in that fund growing to the tune of anywhere from 8 to 12% per year. And in some cases, a lot more. And then what we can do with that is we can actually borrow from that cash value we're borrowing. We're taking loans against our death benefit, and we're using that to pay for things like cars, college, large expenses in general, but it could also be smaller expenses. And we can use that to pay off debt, and we can just use it for pretty much anything we want to, right? It's the same as having our own personal line of credit that there are no credit applications with. There's no credit history, no checks, none of that stuff. It's your money. You can access it at any time you want and for whatever reason you want. And we just continue to just cycle money through the policy. And we call it infinite banking because we just continue to do this and do this and do this until, the day comes when we want to use the policy. We want to stop funding the policy. We want to stop taking payable loans to the policy and just start drawing retirement income for the rest of our lives. And the policy just, the process just continues. And then in the end, when we die, the death benefit is gonna pay off any outstanding loans in the policy, and the excess is going to be paid out to our beneficiaries tax-free, and then they repeat the process on and so on and so forth. So hence the infinite banking concept.
Right. You do it, teach them to do it, they keep it going. So it's just like this wheel that just keeps going down the family tree. Man,
Absolutely.
why do you think most people do not know about this? Can of worms.
Oh man, that's the $1 million question, right? And that's the one that when we get that, it's like that's supposed to be the gotcha question, right?
Right.
We'll get the I don't know. Can I say smart ass?
Go for it. No, I had an episode I was shooting today. Another veteran, him and I were just cussing each other out and going at each other, so it's fine. Go for it.
Yeah, no, I got you. But we'll get that question when folks want to try and hem us up. Why don't more people know about this?
Yeah.
There are really 3 forces, in my opinion, that are working against us.
Mhm.
The first is the banks. Right now, people don't, if you really think about it, how much power and influence the banks have in our everyday lives, right? Because they fund pretty much everything. So anything that touches our lives, that we interact with on a daily basis, whether it's the media, television, all of our sources and everything that we do in our lives, the banks are involved in all of that. The banks have a vested financial interest in you putting your money in the banks, right? So while they do oftentimes will have life insurance, programs and policies. I mean, USAA Bank has its own life insurance, right? Navy Federal has their own life insurance.
Yep.
But they don't want people to be investing in life insurance, right? They don't want people to be growing, large amounts of cash values outside of the banking structure, right? Because they don't make money on it. So they're not going to promote it the same way that the life insurance carriers are. Okay. Number 2 is the government, Okay.
I
The
knew it. I was
government,
like,
yeah.
number one, the government. We can end it there. Just say the government. Done. It's easy.
Yeah. Now I know when you say the government, right? Everybody thinks you're just wearing a tinfoil hat. So maybe we'll
Right.
just pare that down and say the IRS, right?
Yeah,
Because
there we go.
everybody hates the
IRS.
IRS.
It's still part of the government. Goes back right to it. It's an arm of the government. Okay.
It is. So the IRS doesn't want us to be putting a ton of money in life insurance. Why? Because it's not taxable. All right. Government loves life insurance for the death benefit because that takes some of the weight off of the state when we pass away. You know, it's less that they have to pay to basically pick up the pieces when we make our grand exit.
Right.
But they don't want us to be putting a ton of money into life insurance because they can't tax it then, and it's protected. And so unlike a 401k or an IRA or some of these other qualified accounts or stocks, mutual funds, et cetera, the government's hands are off when it comes to the majority of life insurance, right? So that's the third one, or that's the second one. The third one is kind of the history of whole life and an indexed universal life. Now, this kind of goes back to, you know, like what we were talking about before with how the policies are structured.
Yeah.
In the beginning and kind of throughout the time before, you know, these IRS codes came online and before the TEFRA, DEFRA, TAMRA acts came online, it was kind of the wild, wild west in life insurance, right?
Really?
And as a result of that, you had a lot of insurance sales reps, we'll call it that, right, that were going out and they were advertising that this was an absolute replacement for, you know, any kind of stocks or mutual funds, and that you could get, you know, 25-30% returns, you know, in these policies. And, you know, they were writing them in such a way that was majorly benefiting the agents, you know, the writing agents, and not so much the clients, right?
Right.
And so you had a lot of very disappointed clients, first and foremost, when they weren't receiving these, you know, 50% gains every single year. But you also had people that were starting to realize that the way these policies were being structured was not favoring the cash values, right? It was favoring the commissions that were being paid to life insurance agents. And so that message started to trickle down, and it got to, you know, some of the more prominent voices like Dave Ramsey and Susie Orman, you know, who then took to the airwaves and said, life insurance is a terrible place to put your money because you'll never see returns on it. It's expensive. Well, yeah, of course it's expensive if you're paying your insurance agent a $50,000 commission, you know, on your investment, because all you did was buy $3 million of insurance and you have no cash value, right? So in that case, yes, it is very expensive. But the way that we do it now and the way the industry is regulated, it's a much better, much safer, and much more predictable product.
Yep. Yeah. I like those answers as far as what you said, like these forces, and that goes back into the history of all this, that people aren't. There's so much history to finances. People don't realize there's history to credit. Credit's over 5,000 years old. People have no idea. I didn't know.
Yep.
Life insurance, it's up there. Life insurance and credit are old. They're nothing new. Like, it's been around since I want to say, like,
it's been over 200
times.
years.
Yeah, it's nothing new. And I was like, this is not new. Nope. It's not how it works. Like annuities, I think was a thing 100 years ago. I want to say that for some reason, I want to say the Swedish or Dutch did it. Then the founding fathers had their stuff too as well. Like, it's not a new thing. It's only new because now it's marketed to everybody else. Oh, now you can have access to it. I think for a long time, like you said, like only the wealthy knew about it and had access to, or those who had wealth could do it that way to protect themselves.
Right. And that's also kind of, you know, that brings up the short answer to your question. You know, why don't more people know about it? The short answer is the people that know about it are doing it, you know. And so, and that's been the case, you know, with large corporations and the ultra wealthy for just as long as life insurance has been around.
Yeah.
You know, I had a question the other day because we work with business owners, and it was the same kind of question. How many businesses out there are using, you know, index universal life products to, you know, be able to build their own working capital? And I said, well, if you canvass your neighborhoods and your communities, you'd probably find it's less than 1%. But if you went to Wall Street, or you went to Silicon Valley and you talk to some of these huge tech giants, I guarantee you it's closer to 100%.
Yeah.
Because, banks are doing it. Banks have what they call bank-owned life insurance. They've been, putting money in life insurance companies for hundreds of years, in fact. Why? Because the insurance carriers are actually a lot more solvent than the banks. They're required to keep $1 for every premium they collect, for every
Wow.
dollar of premium. So, we didn't have in 2008 when we saw Bear Stearns and Lehman Brothers, these multi-billion-dollar banking, companies completely go under and go insolvent. We didn't see that happen to life insurance companies. It didn't happen at all.
No. Yeah, yeah, definitely. Yeah, you're right on that. Like you have these big banks and stuff, but you don't see it with the insurance companies. And especially now lately, was it last summer? Last year with the bank runs? With the bank runs, was it last summer? Last year? Or was it earlier this year? I think it was last year.
Yeah, last year, I believe.
Yeah,
Yeah.
like you know those bank runs, but like life insurance companies were still going. It's
Yeah,
they're just still
exactly. Why
going.
would you pull your money out of life insurance?
Yeah, it's
I
like they're
mean,
still going strong. I'm like, it's a good industry. The people need to know more about it, and it's just is now specifically for the veteran community. What should they know, and how should they get things set up? Especially, I never had a TSP, but like if you're in the military, like, can your TSP carry over? Can you convert that to, like put the money and take it into a whole life policy and do the banking like you suggest, or how should they go about knowing this? Like if they're about to get out, or they were out or out now, what can they do to start preparing for their retirement? I'm sorry, have a tax-free retirement because
well, it
because
could be
I don't think
both. I
people are
mean,
saying like you're talking like you should paying taxes and my thing is like if you're gonna take out let's say you need to take out 5 grand from 401k whatever like you're not taking out 5 grand, you're taking out that 5 grand minus fees and taxes. I'd rather take out five
yes,
grand and pay whatever fees and that's it. That's what I'm getting. Period.
yeah,
I'm done.
right. Yeah, no, there are really a lot of strategies that we can use, and they really use kind of the same, the same myriad of products. And again, if they want to keep their money in TSP, that's fine. The problem is that when you get out of the military, unless you go to work for the federal government specifically as a GS civilian or a GG civilian, you're not going to be able to continue to fund TSP. Or if you work for a federal agency, let's say, but
Yeah.
you won't be able to fund it if you're just strictly civilian at that point. You would just, whatever you had in there would just have to ride until you were ready to start drawing it, ideally like 67, but really any age after 59 and a half. So there are a couple of different strategies that we can look at. Unfortunately, if you go to draw the money out before the age of 59 and a half, TSP is actually going to charge you a 20% early withdrawal penalty.
Jeez.
Yeah, and what they do, the reason for that is because they do the 10%, which is federally mandated, but then they add on an additional 10% to basically offset the effects of your income tax bracket at that point, right? So if you're taking a large withdrawal, it helps to kind of offset those taxes when it comes tax time, later on. But really what it equates to up front is you're going to lose 20%, right? Now, if the amount is small, and by small, I mean, we're talking like, let's say it's less than 100,000, right? It may be worth it, right? Because what you're going to lose up front in the percentage of the total value, you're definitely going to make up for later on in the
Yeah.
indexes. And not only that, but you also then protect your money against any future market volatility by rolling it into an indexed universal life or an indexed annuity, type vehicle. We can look at annuitizing money. There's no tax, no pre-withdrawal penalty if we roll it into an indexed annuity product.
Yeah.
And that way, what we can do is we can leverage the same indexes. In some cases, we've got indexes that are earning an average of, like I said, 14, even upwards of 20%. They typically tend to credit about every 3 to 4 years. But you could definitely, using some of these strategies and the way that we balance and we review these accounts every year, a person could expect to double or triple their money in a 10 to 15 year period. So if they've got $100,000 in the TSP, we can definitely make that ready for prime time by the time you're ready to start drawing from it later on, whether that's tax-free or tax-deferred, which is what we have with annuities. As far as life insurance goes, the one thing I would just really strongly urge, especially for retirees, right? Because the two big things that people have to decide, veterans have to decide as they're getting ready to retire from active duty or even the reserves, is do I opt for Veterans Group Life Insurance, VGLI, and or the Survivor Benefits Program, SBP? My advice, unless there are serious medical complications, and even then we have a new product that we're going to be rolling out here in just a couple months called Vet Life, that is specifically designed through one of our insurance carriers specifically for veterans that would have otherwise, proclivities against, that would have insurability issues. We'll just put it that way, medical issues that would affect their insurability.
Correct.
So unless there were specific reasons that you couldn't, qualify for a life insurance policy through a major carrier, I would strongly advise against going with VGLI or SBP. VGLI will sound like a really good deal when you're first getting ready to retire. Well, you can get $500,000 of coverage and it only costs you $40 a month, So where could that go wrong, right?
Right.
Well, the question that you got to ask yourself is how likely are you to die within the first 10 years after you retire?
You know what? Let me say this too. People don't think about that. They're like, that's great. I'm like, people think about that's what it's for. It's that 10-year, that period, right? And people realize too, when it comes to just term policies in general, less than 2% payout. Now I think now it's up to 5%. That's still very, very small. It's
very small.
You need to have it, but what are the chances that you think you're going to pass away and that it's going to pass out? Because then you pay all this money, and then if you want to renew it, your premium skyrockets to the moon, and then some.
Absolutely.
Being generous, and it's people know that. That's something to think
renew,
about.
Exactly. Yeah, you can renew VGLI for the rest of your life. But here's the thing, right? When you get up into age 70, 75, the time when most of us expect that, we're going to be making our grand exit. At 75 years old, you're going to be paying about $13,000 a year for life insurance.
Oh. So,
and
to the
that
moon
number,
and to the moon and then some. That's where it's going. It's a lot.
It just continues to go up and up from there, right? So if and that may not even be quoting. I'm trying to remember the numbers. I've done several videos where we've done a cost comparison.
Right.
The reality is that VGLI seems like a great idea. Group term seems like a great idea, but the fact that these policies only pay out less than 2%. It's literally the most expensive form of insurance you can purchase.
Yeah.
Because there is no return on it whatsoever. And if you get to the age, and here's the thing, right? If you get to the age where, you're 75 years old, I can afford it. I can afford, $13,000, $14,000, $15,000 a year in life insurance. Well, if you can afford $15,000 a year in life insurance, I got a much, much better solution for you, one that will allow you to draw 6 figures tax-free in retirement, right?
Yeah.
So, I would definitely recommend against, like I said, the group term options, unless it's an extenuating circumstance. SBP, same thing, right? Survivor benefits, they're going to take 6.5% of your entire pension. It's only going to protect 50% of your pension, and it's only for your designated spouse at the time you retire, right? If you get divorced or, God forbid, something happens later on, or if your spouse passes away first, guess what happened to that 50% of your pension benefit?
Gone.
It is completely gone. Completely gone. And that doesn't matter if you've been paying into it for 20 years or more, right? That money is absolutely out the window. So again, some people, it may be for them, and that's fine. I'm not here to judge, and I'm not here to, tell you what's right or wrong, but I'm just telling you my recommendation is that we have much better strategies, money that you can grow that will then stay in your family long after your death, right? It will confer to your beneficiaries. I mean, imagine being able to, pass on $300,000 or $400,000 to your kids when you go, right?
Right.
Imagine that being, the baseline. Not only were you able to draw an entirely tax-free retirement, for all of your golden years, and get to enjoy your life that way, but when you died, now your kids get to start at, whatever it is, 200, 300, $400,000. Whatever you've built up over your life is now going to stay in your family. It's not going to affect their tax bracket one bit. And all we're going to do at that point is we're going to create, insurance policies for them that keep the money growing tax-free, and we just complete the cycle at that
Yep.
point. So,
Yeah. Would you agree that there's the life insurance, if you really want to maximize it, it requires strategy, not just, all right, I bought a policy and I'm paying dude for X amount of time. It's like, we need to break this down. Look what your goals are. Here's going to do it. Then it's everything is, I swear to God, in finances, there's strategy to it all. There's a game. And we're taught like the bare minimum just to participate, but never really to like, here's how you get the actual awards.
yeah.
It's
Yeah, and it's a game that, as professionals in the industry, we don't play alone either. Because it's not in the best interest of my clients for me to just be a one-man show, right?
Yeah.
I can do a lot of things, I try to diversify my services as much as possible. But it's definitely in their best interest for me to collaborate, with people like yourself, that do things like credit repair, with, lending agencies, with real estate agents, with, mortgage brokers. We reach out across the aisle because at the end of the day, what I want to be able to do is I want to offer a holistic solution to my clients. I don't want it to just, I don't want people to just think, oh, well, all I do is sell life insurance, right? I don't consider myself a life insurance salesman. My job is to help them to achieve financial freedom and financial peace. And the best way that we can do that is to take a completely holistic approach to that. We look well-rounded. We look at, we use life insurance, but we also use, business strategies. We look at, if they're going into business, we just Victory X, we just launched a comprehensive new product just this past month called Vet Biz. And that's exactly it. It's a comprehensive launch pad for veteran-owned businesses where we're looking at it from every angle, including the marketing side, right? So we're bringing in digital marketing, we're bringing in branding and logo and website creation and mentorship. It's an entirely 360-degree approach to this. And I didn't just create all this stuff myself. I reached out to, experts and subject matter experts in the community that are then kind of converging and coming together to offer these in a comprehensive solution.
I like that. Yeah, I like that. You get the same approach to me when I talk to any client of mine. I'm like, look, besides credit, what other financial goals have? Insurance, retirement, money, whatever. Cool. I have something for you, free of charge. Talk to them because, like you, I want to be able to give them like, hey, I fix your credit, and then I have someone else. I have someone on my team that can help you with the life insurance aspect with you. They're veteran. Maximize that because then they're way better off at the end than when they started. And it's like, it feels good to provide that to somebody. Say, hey, you're good. Now, if anything else happened, you got me, you have Dan, about whatever, your money's protected. You're not going to lose anything if a tax
Right.
It's
and the best part is that, we don't consider our services to just be a one and done. I think you kind of touched on that.
Yeah.
This is when clients enter into these agreements with us, this is considered a long-term, in some cases, a lifelong partnership. And my job at that point, I see it as kind of my personal charter to not just sell a person a policy and get them started in it. My job is to continue to coach them, right? Because the most valuable product that we're bringing to the table is our knowledge, right? It's not even the life insurance contracts and the, lending agencies and the banks and stuff. No, what we're bringing to the table is strategy. And so it takes many, many years to be able to really, become a bona fide expert in this stuff. And what I want my clients to do and to become are experts in how to, how they think about money, how they teach their kids about money, how they make their investments, and how they set themselves and their families up for financial success. And that's an ongoing process.
Yeah.
So yeah, we're not just selling them something and just, pushing them out the door. We're
Right.
in it. It's almost like we're family at that point. So
Yep. It's a lifelong thing. My dad said this to me at the end of 2019. He said, taxes, credit, insurance are the three things that follow you your entire life, yet they're the least understood. He said that. I'm like, oh my God, he's right. I'm like,
yeah, boom.
I was like, they do follow you for your entire life. In fact, before you're born, your money's already affecting your life before you come in. When you're born, before it's an insane thing. And I was like, that's a good point. That's a
Yeah.
good point. And it's fact, straight up.
Absolutely is. And the way
Jeez.
that we are taught to steward money, through the major institutions, whether it's schools or whether it's workplaces, et cetera, we're conditioned to be consumers,
Yeah.
right? And what we want to teach people how to do and become are producers, right? And it's, just because you're not, a tycoon of sorts, a Wall Street mogul, if you will, doesn't mean that you can't live life in a producer mentality the same way that multimillionaires on Wall Street do.
Right.
We can use these same vehicles. We can do the exact same processes, and we can make it work for us. It doesn't mean you're going to be a multimillionaire. I'm not a multimillionaire, but the goal is to become comfortable and to build wealth over generations and to
Yeah.
keep it in your family.
Yeah, that's what it's about. It's keeping the family and building that family wealth. And people, that's not taught. And I've learned that over the last, I don't know, 10 years or so. I think more so getting into the life insurance industry and understanding that the reason why these families stay wealthy, the super wealthy ones, because somewhere along the line, someone started it and they kept it going and they keep it going and keep it going and keep it going. It's like, hey, keep this wealth going. That's why all these families to live the way they do, and do what they want pretty much. Because they
Yeah.
started generation and they just keep going. Now, you do have those in family that squander it all and do dumb stuff. But for the most part, their stuff just keeps growing no matter what happens, no matter what happens.
Absolutely. Yeah,
And that's what it
absolutely
is.
does. And I mean, we could spend all day going down a rabbit hole
Oh yeah, we
about
could.
all the effects of, all the terrible effects of class warfare that happen, because people don't understand the ability to be able to generate wealth. They just want to sit there and look to the rich and say, oh, well, those people are just evil because they're preying on everyone else. When in
Right.
reality, it's like, if you just understand how money works, you can do the exact same thing. You can participate in the same processes, and then you can teach your kids to be just as successful, if not more so. And then there would be no class warfare at that point.
No, it wouldn't be.
Yeah.
And that's unfortunately where we're at in the world, at least in the Western societies. That's where
Yes.
this is where we're coming from, but that's as much as I'll say on that. You just do
Yeah, I was gonna say I don't
You
want
could
to.
be,
I don't
yeah,
want to
because
get too deep
if
on
I
that
go
one.
just a little bit more, suddenly
Yeah.
way controversial for all the wrong reasons. Or like, all I said was that, yeah, we won't go there. But
Right.
this has been good, Dan. I appreciate you being on, man. Is any other last things you want to share with people on kind of military insurance, like anything else that you feel like would benefit people?
I would just say, just keep your minds, open, and keep your options open. Um, there are some really powerful strategies available. I wouldn't discount them just because you haven't necessarily heard about it before. Our job in this industry, I see it as, like I said, my personal quest to inform as many people as I possibly can. I really appreciate you bringing me on, because it's platforms like this where we can really get that message out to people. And I tell clients or prospective clients, I say, even if we don't do business, I offer free consultations. We can go through this stuff. They can check it out at my website at victoryxfinancial.com. They can get on my calendar. It's definitely not beneath me by any stretch to call clients and, or even just people that want to get on the calendar, prospective clients, and just talk through their strategies. And if in the end, they decide that whatever they're doing is best, then hey, great. I will encourage you, and I will. I hope you win. I
Right.
mean, it's like I'm not in this to try and compete or prove myself right. I'm just here to share information, and the more people are open to this information, and the more that they're, that they allow themselves to kind of be coachable and to sort of rethink the way that they think about money, the better off they're going to be. So,
Yeah, I like it. Both you and I are on a lifelong mission of like change the world financially. Here's the game, here are
absolutely.
the rules. Start with the young, learn how to use this now, and all that stuff. So,
You know it.
when I run my I got a virtual financial literacy course for kids age 10 up. Next time I run it, I'll definitely have to have you on as a guest, talk about life insurance. Be like, here's how you learn it now. They're gonna be under 18, so they can't sell it, but at least you have something to go to once you reach that age. I'm
There
like,
you go.
"Dad, you
Yeah.
can't do it right now. Get your dad to help out mom. I don't know how. Just run, you go on points with them because this is your money they're making for you. Get the
You know
experience.
it. Yeah. Well, I will say this, my daughter's 14 and she has an index universal life policy. So, yeah,
Smart.
it's, this stuff, it applies just as much. In fact, it's actually better in many cases for kids because they got more time to be able to grow
Oh
that
yeah,
money.
more
And they're
time.
really, yeah,
They're
they're really
grandfathered
cheap to
in.
insure too.
Yeah, I bet. Yeah, they got more time. They're grandfathered in. Therefore, if anything has happened on the road, they're fine. And some people, I talked to some people about that. Some people are like, "Should I really insure my kids? Can you use that?" It's like, yes, you want to,
Yes.
because the longer you wait, it's more expensive. Get them in now. They build it. They got so much time. By the time they're whatever, then they'll be. It's one of the best gifts that once they understand, they're gonna go, "Oh my God, thank you so much for doing this for me." It's one of those
Yeah,
things. So cool.
absolutely.
Dan, it's been a pleasure. It's been good, man. It's been awesome. I thank you for being on. Appreciate it.
Absolutely, Matt. I really appreciate the opportunity, man. Thank you.
All right. Take care.
All right.